Is the stock market going to crash in April or March of 2014? There's been a lot of talk and speculation lately about stock markets correcting, stock market crashes. Let's discuss this a little bit. Now, is the stock market likely to crash and go down by 50% in this time period? Not likely. However, there are certain events that are brewing in the background that could cause a sharp sell-off. One would be if there's a Japan-China conflict over the disputed islands in the South China Sea, which has been heating up on and off with naval exercises and rhetoric between the two countries. That could certainly really cripple the markets if that were to occur. If there's unrest, if the unrest in the Ukraine continues, and Russia has an intervention or moves an army into Ukraine, um, that could be a significant downward movement on the stock market, especially if the U.S. Is supporting the opposition side. It could ignite a new Cold War. Any type of Mid-East unrest between Egypt, Syria, Israel, Iran, Iraq, these could also lead. There is trouble brewing in Egypt and Turkey as economies are still shaky and governments are not getting the results they're looking for. Still tensions between Iran and Israel. Any type of Mideast unrest will affect the markets. The continued tapering of the Federal Reserve by reducing the amount of bonds they're purchasing by 10 billion per month can have a volatile effect on emerging market currencies. And this, when this news becomes apparent to the traders, this does definitely send the Dow and the S&P 500 lower as they're worried about disruptions in these currencies and a currency domino effect that we last saw in Asia that devastated Korea and Philippines and Thailand. A reoccurrence of this would be another thing that could generally spook the markets. Um, Now, the economy is the big question. Is the economy expanding or contracting? Because the stock market is all about the economy. So if the economy continues to expand, then this little turbulence or volatility in the stock market will smooth out quite nicely throughout the spring and into the summer and fall. So if the economy remains strong and moves forward with little or no inflation, the stock market will just do just fine and will probably hit even more highs. Now, the winter provided mixed signals on manufacturing and housing starts that had a lot of people questioning the direction of the economy. And there's a lot of issues with China's economy, specifically their debt bubble and their currency that's worrying and affecting a lot of the stock markets around the world. Now, if the emerging markets have lower their currencies devalue, that's going to lower multinational profits as they seek to return those foreign currencies into dollars back into their American headquarters. This could also have an effect on lowering the value of multinational companies, which have a definite effect on the S&P 500, which is primarily multinational economies. I'm sorry, companies. So this is all sort of in the mix that all traders are worried about, all these sort of things. Any type of breakout news that could occur in this 2-month period in March or April is likely to have a significant downward effect on the stock markets. And it's very probable that a correction of 10% or more could occur in the March or April seems the most vulnerable time period. However, long term, stocks will continue to rise, continue to beat inflation, and continue to be your best investment. Although most likely the next 10 weeks will be volatile with some days of very high returns and possibly many days of very low returns. Uh, as always, traditional conservative investors make their investments and hold them for long periods of time and can ride out these bumps. But knowing and expecting this to occur may help you to avoid any type of capitulation. So that's it for now. Let's see what happens.